Hyperscale cloud sparked a major wave of growth in the industry a few years ago, but will AI do the same? Joining me now in Toronto for Structure Research's Infrastructure Summit 2023 is Raul Martynek, CEO of DataBank. And Raul, first of all, thanks so much for talking to me. It's a pleasure to speak to you for the first time. And then you've been running the company for quite a few years, and it's been amazing to see the wave of growth and all the investments and the selling, the buying, and all those sort of things. It's been an exciting journny.
Thank you very much. Thanks for having me, Joe. And yeah, it's been a fun 6-7 years.
Yeah, and we'll get into it as well. The last 6-7 and the next 6-7 exactly. To see what's going to happen.
Just starting.
But talking about now more the wider markets, no, not just so much about DataBank, but the wider market and this AI wave that we're seeing. How big is AI going to be for the data center space?
Yeah, I mean, I think it's going to be massive. I mean, AI to me represents kind of the new era of computing. It's kind of AI is a general purpose technology, very similar to what the internet was 25 years ago. I think it changes everything, and that means it's going to be applied everywhere, so it's going to be very massive.
And how does the demand AI profile really look like? What does AI require from a data center operator like yourself, for example?
Yeah, the demand profile is really interesting, and obviously we've been in this only 10 months, right? I mean, I like to say, from using the baseball analogy, we're not even in the first inning, we're still warming up, right? So, I mean, the demand profile today is really, led by technology companies like Microsoft, like CoreWeave, others like that, and all this leasing that's happened this year is going to be installed over the next 18 months. So right now it's very much focused on the most sophisticated technology companies, but I think it starts to get more democratized and more enterprises start to adopt that and use that type of technology as well.
Let me pick up on what you just said about the 18 months, because I sat down in your keynote this morning here in Toronto, and you were talking about a potential drought, a capacity drought in 2024, because everyone is kind of building out now for the next 15, 18 months, so 2025, 26 really. How bad are things going to be next year?
That's a great question. And, look, I think ourselves, like a lot of folks in the space, we've had a really robust year from a leasing perspective. We've sold almost 2 years worth of inventory in 1 year.
Wow. Compared to like
prior years, yeah. So we're in the process now of installing all that inventory. I suspect a lot of people are in the same boat, and when you go around today and look at vacancy levels in major markets, it's very, very low. So it wouldn't surprise me in the least if next year becomes a year where pricing continues to go higher because the supply is very constrained, and the demand is going to continue at the pace that it is right now.
That's interesting, and I think it was actually Chris Crosby in your panel as well. They brought up the supply chain and how much data centers now weight in the revenue budgets of manufacturers. Are they able to cope with this? Is that going to impact? Because we keep talking about supply chain, and COVID really disrupted things. But the way the conversations were seeming to be going now is that we kind of solved supply chain. But then this morning after the conversation, I was like, maybe we haven't.
Yeah, I don't think we're out of the woods yet on the supply chain issues. Obviously they got bad during COVID. They started to improve over the last 12 months, and then all of a sudden we've had this tsunami of demand, and lead times have gone, from 52, 60 weeks to 80 weeks, so to 100 weeks. So I think, from what my conversations with the manufacturers, they've done a lot to increase their capacity, but I think it's still going to be a challenge for the next couple of years.
Okay, so what about the DataBank platform? Because you have one of the biggest footprints in the US. We'll talk about the assets outside of the US in a second.
Sure.
But you have a huge footprint in this country.
Right.
Well, not the neighboring country, sorry, we're in Canada. What's the plan from here? What are you going to be doing? Is it going to be greenfield? Is it going to be brownfield?
Yeah.
So are you looking to acquire?
Yeah, no, look, we operate now the largest geographic platform in North America of any company. With 26 markets, 70 assets, so we feel really good about our geographic reach. Our focus right now is on organic expansion. Our focus is on continuing to deliver inventory for our existing 3,000 customers. So I'd see us making a series of announcements around land acquisitions. I don't really envision us seeing an M&A transaction. Again, we've built the platform, and now it's time to kind of deepen the amount and scale and bring on more capacity.
It's interesting, and you mentioned 3,000 clients, and again, picking up what you said this morning, 3,000 clients is a very wide scope of sizes. So you might have a Fortune 100, and you will have someone who's a startup of 2, 3, 4 people. How do you, as a provider, a service provider, how do you differentiate the portfolio to service those companies with 2 or 3 people, and then those companies with like billions of dollars in revenue?
Yeah, it's a great question. And look, I mean, ultimately those companies are very different, like you said, but their purpose for being in our data center is exactly the same, right? We are supporting their mission critical applications, their data, their business, right? So it doesn't matter if it's a single cabinet customer or a customer that's occupying a 40 megawatt data center. In terms of our attitude around 100% uptime, in terms of being able to be responsive to them, we have to act the same way. Yeah, you're right. These customers have a lot of different needs. We have data centers that are geared more towards interconnection. We have data centers that are geared more towards, scaled enterprise deployments. We have data centers that are in different geographies that could be scratching a niche that they have, right? There's a lot of different reasons why customers deploy, and we have a very diversified portfolio that gives us a lot of opportunity to have conversations with customers and meet their needs.
Okay. Then looking to the footprints overseas, the beyond borders of North America, you've recently sold a few assets to Equinix, and I believe it was a few French assets. I don't know if there's something outside of France.
That's it.
Just France, yeah. So you sold those assets. You don't really have a footprint in Europe anymore. Correct. What's the long-term plan? Are you just really going to focus on North America, or are you going to really expand?
No, that's correct. I mean, we acquired those assets in a data center in London through the Zolo transaction that we completed at the end of 2020. Ultimately, we decided that our opportunity set, our best return on invested capital is here in America, where we have just a great platform, 3,000 customers, a lot of engagement with those customers. So it was really just an allocation of capital decision. We think those assets will be better served by an operator that's focused on the European market. We're going to stay focused on kind of the US market.
Okay. Going into 2024, what do you think is going to be the most challenging thing that's going to hit the sector? Of course, power is a big conversation everywhere we go, but is it power, or is there something else like lying underneath else that we're talking about that we're not really?
I think power and the supply chain are going to be the two biggest things. I think pricing is going to be a very interesting thing, especially in terms of like where pricing goes. Does that kind of dent demand a little bit? Because, a lot of the leases that are coming up for renewals are now, going to be coming up for renewal in markets where pricing has moved up 50, 60%. So, but I think everyone's got their head down right now, trying to install and build all the leasing that's happened in this year.
Okay. On the capital front, and I won't give you for much longer, but on the capital front, and this is not related to DataBank itself, it's just an industry-wide question. On the capital front, how are we going to see a lot of shifts in terms of who's backing all these developments? Because we've seen in the last few years a lot more private equity, pension funds, all those sort of things coming into play. How do you see, in the place that you are right now, how do you see that shifting, if shifting at all, in the next few years?
I think at this point, if you look at all the big platforms, KKR, Carlyle, obviously Brookfield, our investor base with Swiss Life and Digital Bridge, IFM. So I think a lot of the large platforms already have the equity sponsors, where I think from a capital perspective, we're going to see the most action is around the debt side. The quantum of capacity that's being delivered now means that tens of billions of dollars is required to fund that, from a construction loan perspective, from a securitization perspective, from a bank debt perspective. And the banks are under stress because they have a lot of commercial real estate loans that aren't doing well, or retail that's not doing well. So I think that's going to be the biggest challenge, is kind of rounding up the capital on the debt side, given the stress that a lot of these financial institutions are under.
And then last question around capital, what about sustainability? So how easy or hard it is to get money now to build facilities if you don't have a clear sustainable strategy in place?
No, I think, look, that's evolving. I'd say, every country is different. Here in the U.S., obviously, there's a lot of investment going into the electrification of the renewable energy into the grid. Ultimately, that's the way the sector gets there. I mean, for projects like ours, where we're developing in metropolitan areas, we're not going to be able to place that next to a solar farm, right? And our customers understand that, but they need to be in that location. So we've been making a lot of improvements in terms of increasing the amount of renewables into our mix. We still have a corporate mandate to be 100% renewable by 2030, and our view is, based on the investments we see being made in the transmission and generation, that it's going to be possible.
Yeah. Okay. You're on track to be 100% green by 2030.
2030.
Yeah. It's only 30 quarters away. To give it a take.
Before we know it.
I know. Last question. If I gave you $2 billion to invest, what would you do with it? And the only condition is you cannot invest in the existing portfolio.
I'd probably put it in treasury bonds because right now, if I can't put it in my own portfolio, that's the best return of investment. Is we build more capacity because the demand is out there.
Okay. Any specific markets, geographies, locations?
We like our major markets like Salt Lake, Dallas, Ashburn, Atlanta. Chicago, and we're also building in 10 other markets that are at smaller footprints like Seattle, San Diego, Minneapolis. Again, we do think that these workloads are going to decentralize with AI, so we want to have capacity not just in the tier 1 markets, but the tier 2.
Okay. Well, I don't really have $2 billion to give you, but I'll be waiting for someone else to give it, and I'll watch how things develop. But Raul Martynek, CEO of DataBank, thank you so much for talking to me.
You bet. Thank you very much.
As for your home, thank you for watching, and do check our website and give us a follow on social media for more timely digital infrastructure news from across the world. At the Tech Capital, you lead, we report. Bye for now.